Basically, I'm going to be waiting until the ETH BTC ratio drops down to a minimum of 0.037 something and basically start buying there, but really buy all the way down to an anticipated 0.025. And you'll note that it's currently, the ETH BTC ratio is 0.055 or so. So that's got a ways to go. But there's a massive support level, a massive support level on the ETH BTC chart that goes back to like 2017. And I anticipate that it's going to break to the downside. And if it doesn't, my thesis could be invalidated. But then we're holding Bitcoin, so it's all good either way, right? But if it does break below that, people will notice this and people will rapidly sell their Ethereum because they know that breaking down out of such a massive support level, they want to front run everybody else. And that's how we'll get to that level. That being said, the next year is going to be a pretty wild ride, I think, because we have like an election year. And of course, no political party wants to look stupid economically. So are they going to just keep pumping the markets up? But how long can they do that when you have the inverted yield curve and you have the Fed funds rate like super high for so long? I personally don't think we're going to make it through all of 2024 before we start seeing the cracks and things breaking in the system. I just don't really think it's possible. I mean, I guess they can bail things out as they break, but anyways, it's a game of chicken. And so in the meantime, we're getting this nice run up, the ETF hype, but like it's a ticking time bomb essentially. And I've got my, my finger on the pulse, and I'm trying to be real careful to take profits before it's too late. And that's kind of a side note. That's separate from the ETH BTC thing. The ETH BTC thing is nice because you can sort of just hold some percentage of like hodl forever Bitcoin. And then if the ETH BTC ratio drops super low, then you can make a nice swing trade out of it, but you're not really obligated because either way you're holding some crypto exposure. Now, originally, I had not planned to wait until the recession to rebuy back into Ethereum with my Bitcoin holdings. It's just turning out that way. Like it's taking so long for the ETH BTC ratio to drop back down that at this point, I'm thinking it looks like the only thing that can break down a support line of that magnitude and something that's, been held for that long, and the timing of it all, it just looks like it's going to end up being probably the recession. So it wasn't the original plan, but it just looks like that's how it's probably going to unfold. Obviously, anything's possible. Maybe it crashes before the recession unfolds. But honestly, I can't see it getting better during a recession. So it would just get even worse at that point. But yeah, I'm definitely just patiently waiting. It's a cool strategy because there's no like rush. There's no hurry. There's no set in stone timeline. You can just bide your time. Whenever it drops back down into that lower range, you're at will to buy. Be patient and cycle between the highs and the lows of the ETH BTC ratio, essentially. It's interesting because I feel like the merge for Ethereum sort of threw like a monkey wrench into the normal pattern of things. And normally, I think ETH BTC would have dropped a lot sooner. And so I had sold my Ethereum for Bitcoin like over a year and a half ago. And I've been just waiting this whole time. And finally now, if I traded it back, I'd be in profit. But I'm going to wait for longer. But I think that that's what happened here. I think that the effects of the merge made people on a sentiment basis like more bullish for the whole like deflationary kind of aspect of Ethereum's proof of stake model. And so it sort of like pushed the timeline of the ETH BTC ratio dropping further down the road by like almost a year. And, just as some random thoughts here, but now that we have like the mainstream BlackRock ETFs just jumping on board, like a dozen of them, isn't that such a euphoric indicator? And wouldn't the best way to wreck the entire Bitcoin space be to prey upon their expectation that a bull run will occur after the halving event as a function of the supply reduction issuance? Everyone's expecting that. That's always what's happened every time before. And so enter massive corporations, BlackRock, etc. I mean, what better way to wreck everybody than to do the exact opposite and to pump the bull run? I mean, they're not trying to pump the bull run, but it's happening sooner, it looks like. And for the post-halving price to be probably recession influenced and crashing to new lows over the 1.5 to 2 years that takes. That's kind of what I think is going to happen here. I think we're probably peaking out in the next 2 to 4, maximum 6 months for Bitcoin. And then from that point forward, once we peak out and it's over, probably at the latest by the halving event, which is usually the start of the next run up. And then we start heading down and just everyone's wrecked and confused because it's supposed to go up. It's the supply shock reduction. What's happening? And I think it could be things like, people can short ETFs. And I think that Wall Street just having access to this product, it just smells of potential manipulation. So, and that's not to say I don't think that Bitcoin's going to go to $1 million. I absolutely still do. But it's going to have to get through like a bigger than usual bear market timed with a stock market crash. And it's like the everything bubble popping. And then once that has popped and concluded, after that, I think we see a euphoric, massive QE, money printing, Fed, balls to the walls, just asset purchasing and money printing like crazy, euphoria in the stock market, in cryptocurrency and Bitcoin. And then I think in the next years after that bottom, then we see Bitcoin reach $1 million and above.